Hey guys, this is Adam from dodjit.com and this is your video briefing for Thursday the 18th of June 2009. Now the last video I did was on the road, so sorry if you couldn't see the charts properly. We're going to make up for that in this video. What I want to do in this video is go over the S&P 500. I want to focus on the S&P 500 because I spoke about it during our last video, and what I said was that I don't think economic data is going to really cut it this time round to push the indices higher. And look, if you look here carefully, we had this resistance level roughly around here. I mentioned that obviously if we're going to break this level around here, then we can start to think about long positions. If not, we're probably going to head back to test our 200-day moving average. Look what's happened. We smashed down Monday, Tuesday. Yesterday we received this dodgy light candlestick and support on the 200-day moving average. So where are we heading from here? Well, basically nothing has really changed in the trend itself. Even though we've received this kind of correction at the moment, I am still pro bullish positions, and I think this pullback is starting to present a nice setup. The reason for that is because money exited bonds yesterday after a nice rally over the last couple of days. And I'm going to just bring up that chart in a second. I'm going to show you what I'm looking at. Basically, what I'm looking at the moment, and this is something that I published on a few of the articles, we've got this box area around here. And I am looking for another box area roughly around this area, roughly around here. And I am expecting it to form support on the 200-day moving average, which coincides actually, if you look carefully, with the 50-day moving average. So I'm looking for quite a lot of support around this area around here. And to tell you the truth, regarding positions at the moment, there's nothing really much we can do. We're going to just have to wait to see how it plays out. We've received this nice rally. It's gone really high. The angle of the trend, and we showed this in a previous video, has really started to decline now. And I think this is now basically our consolidation stage before the next move. So keep an eye out on that. I wouldn't rush into any positions at the moment. I would see how the markets play out. We could receive intraday volatility that will lead to nowhere in the end. Keep an eye out on that. Let's move over to the next chart, which is the bond chart. Now this chart is TLT. It's a Barclays 20+ year Treasury bond fund. This is the chart I basically use just to follow the bond market. If you can see very carefully at the moment, we've got this trend line coming down roughly around here. We've got this other trend line, secondary trend line, coming roughly around here. And look at this, smack bam, it hit our trend line resistance level. And it formed this type of reversal pattern yesterday. Let's just move this a little bit so we'll be able to see that, like that. It's just, you know what, let's just delete that for a second. We can see this candlestick around here. We received 4 days, 1, 2, 3, 4. And on the 5th day, looks like signs of a reversal. We're going to have to keep a close eye out on this and see how it plays out. But if you look carefully also, we've got this high volume along here. So what I am looking for at the moment, I'm looking for further consolidation on the S&P 500. And like I mentioned in the previous video briefing, we're going to need something a little bit more substantial to force a breakout. That's what I'm thinking at the moment. I don't think economic data is really going to cut it this time round. And what I'm expecting, if we do receive a bit of money coming out of the bond market, especially after this 4-day rally, a little bit of more profit taking out of bonds, money should come back into equities a little bit, but I'm not expecting anything really major or major rally. We're going to need something substantial to really push us forward. So at the moment what we're looking at is just further consolidation. If you're a day trader, you can use support and resistance on all the different charts. Nasdaq is still looking good at the moment. We're going to just bring up that chart for you. This is the Nasdaq 100 index. We can see we've formed this massive rally, little bit consolidation, climbed higher, we even gapped higher here. We've now closed this gap roughly around here, we can see it. And if you look carefully, we have formed support on this previous resistance level. Looks like it's finding a little bit of support. We had increasing volume yesterday, looked good. If we look carefully also, we can see that that support level is basically in line with our Fibonacci 38.2% level. Looks good at the moment. Looks like it's starting to form a little bit of stability around this area. Again, don't get too hasty and jump into any trades. Let's see how it plays out, because overall the markets are starting to consolidate a little bit. So we don't want to be faked out, and in the end the markets are just going to drop lower. Now, the last chart is the US dollar index. I'm not going to focus on any individual pairs in this video, and the reason for that is because I just can't really find anything that's worth talking about. Most of the currency pairs are now consolidating around critical levels, and they're not showing really any signs of a breakout. And we're just going to have to keep a close watch on the various individual currency pairs. And if something comes up, we will post it on either the articles or the forum or somewhere on the website. So just keep a close eye out for that. Regarding the dollar index, it looks like it's also consolidating a little bit. We received this nice increase here, this higher low roughly around here. We can see we've got our low roughly around here, and then we've got a higher low around here. The problem is it hasn't really formed a higher high yet, and basically what's happened is we've received this resistance level roughly around here. We can also see it acted as resistance around this level here, and basically we're going to just have to wait and see how this plays out. We've got this minor support level, which is a trend line obviously. So we've got this bullish triangle. Doesn't look like it's going anywhere at the moment. You've got your two setups at the moment. Obviously, if the dollar breaks out of this type of wedge around here, so we are going to receive major movement on all the individual pairs. Just keep a close eye out on that. You've got the critical levels. My name is Adam from dodjit.com.